Hello everyone, I'm Russell Gard, Managing Director of Forward Prosperity. Today I want to give you a simple introduction to investment loans and how everyday Australians use them to build real wealth. Whether you are an experienced investor or even if you've never invested before, this presentation will help you make complete sense of investment loans and how you can use them. So, what is an investment loan? An investment loan is money borrowed from a lender to buy property that you rent out to tenants. You earn a rental income from the property, which is the fee your tenant pays for having the right to live in the property. Moreover, you can also benefit from capital growth if the property grows in value over time. It's like a standard regular home loan, but specifically designed to create long-term wealth. Why should you choose property investment? There are a range of reasons to invest in property. Firstly, you generate rental income, which actually helps pay you to pay for the loan that you're using for investment. Secondly, the investment properties you own can increase in value and you can benefit from the additional equity growth in the property. Thirdly, property investment provides you the ability to diversify your portfolio, moving away from other asset classes such as stocks, bonds, gold, foreign exchange, or cryptocurrencies. Key differences of investment loans compared to home loans. Although both investment loans and home loans are similar, there are some very distinct differences between them. Here's how an investment loan differs from a home loan. The first difference is the fact that investment loans usually have higher interest rates. Compared to a regular home loan, investment loans will have higher interest rates because lenders perceive investment loans as having more risk than the standard owner-occupier home loans. Another difference is that investors usually choose interest-only repayments, so monthly costs can stay low and they can benefit from any asset appreciation that can happen over the years. Moreover, investment loans often require larger deposits in order to secure a loan with a lender, and there is also the tremendous benefit of lenders counting rental income in their serviceability calculations. This means that the lender will accept rental income when they assess how much money you can borrow for investment purposes. Tax benefits of property investment. Now, before I do get into some of the tax benefits of property investment, I do have to highlight that I am not a tax agent or accountant. The information I am providing is only general in nature and, of course, not taxation or financial advice. Always consult a registered tax agent or accountant before making decisions based on tax benefits. Now that that is out of the way, the real power of property investment is the tax advantages for things such as negative gearing. Negative gearing is when your outgoing expenses of owning a property are higher than the income that you receive from the property. Essentially speaking, negative gearing lets you deduct losses against your other income, such as, for example, your salary, stock dividends, or your own business. Interest-only loans are another finance mechanism investors use to make those tax deductions even larger. And another benefit of property investment is that when you sell after 12 months of holding the property, you pay only half the normal capital gains tax. This is known as the capital gains tax exemption. All these can make investing in property very, very tax efficient However, please remember to always talk to your accountant or tax agent for taxation advice. What do investment loans cost? The costs of an investment loan are very similar to home loans. There are four broad categories that would apply to obtain and maintain an investment loan. Firstly, repayments have to be paid either every week, every fortnight, or every month. Secondly, your deposit is an important cost, which should usually be 20% or more of the total purchase price of the investment property. The reason your deposit is ideally more than 20% is that a larger deposit for your investment loan means less borrowing, and this can also attract better interest rates from lenders. Thirdly, purchasing costs for things like stamp duty, legal fees, and property inspections will also be required in order to complete the purchase of the investment property. And fourthly, a lender's mortgage insurance fee will also need to be paid if your deposit is under 20% of the total purchase price of the investment property. Remember that when it comes to the lender's mortgage insurance fee, this fee is paid to provide insurance for the bank and unfortunately not for you, the borrower. This insurance is in place in case you are unable to meet your debt repayment obligations and default on your loan. The insurance fee you pay helps to protect the lender from financial loss in the event that you default on your investment loan. Investing in property can have lots of risks, and this is why having a broker like Forward Prosperity makes a tremendous difference. At Forward Prosperity, we compare a range of lenders to find the best rates and features for investors. We help handle every bit of the paperwork and help collect your documents to ensure a smooth finance application process. So if you're thinking about your first or next investment property, let's have a quick no pressure chat. Visit www.forwardprosperity.com to book in a free no obligations consultation. At Forward Prosperity, we make finance easy and we help you build a strong financial future one property at a time. Thank you so much for watching this presentation, and I look forward to speaking with you soon.